G'day, my name's Robert Gowdy and welcome to this week's client question. This week we're thinking about farm valuations, and we come from obviously a small town in a farming community where most of the farming is broad acre farming, so a lot of wheat, canola and barley. And what we've seen over the last 3 or 4 or 5 years, a real uptick in the valuations of the farming land we've seen locally. And for those that have been accumulating land over the last 20 years, the results in terms of the price appreciation have been phenomenal, but they've really kicked up a notch in the last 2 or 3 years, even to a point where a lot of these my farming clients that have sold land had expectations of X amount per acre, and it's exceeded that substantially. Where everyone's nodding, shaking their heads. The real estate agents can't believe the figures that's coming through. So is farming land overvalued? Well, I would argue that potentially it is. Unfortunately, for the most part, we haven't seen the profitability per acre or for these farming assets go up substantially. I still hear that what they get for your commodities, the wheat and everything, the pricing really hasn't changed terribly much over the last 20 years, yet the input costs have gone up substantially. So I would be much happier if we saw a scenario where the profitability of these assets were going up substantially, and that is therefore going to justify a higher valuation for the asset itself. But for me, my thinking is that the banks have a large impact on the pricing in terms of the availability of cheap and easy money. So if there's plenty of cheap and easy money and a generation of risk takers that have this mentality that farming land prices always only ever go up, if that's the scenario, then they'll keep buying. I have had some farmers say, look Rob, they're not buying it to make a profit out of, they're buying it for the capital growth. A statement like that absolutely worries me. It smells like a bubble when people start talking like that. So interesting times in the market, but that's what markets do. And cheap money, low interest rates and ease availability, definitely has a habit of driving up all asset classes, which it's what we could be seeing here. Thank you for listening. Please subscribe to the channel if you haven't done so already, and for those that do, thanks very much for your support, and we'll see you next week.